it going? This is Deontay with Black Wall Street Academy again with another video for you guys. In this video, I'm going to be showing you guys how to mark up and be able to kind of follow the order flow of where the banks are buying and selling. So today would be like an introduction to order blocks kind of deal. Order blocks are where banks like to buy and sell, place their buys and sells in the market. And as you know now that you have the knowledge that I put out these last few videos, you know that you want to trade with the banks. You want to trade with the people who actually make up the market, who actually are able to move the monthly time frame, which influences the rest of the time frames as well. You know, they're able to move the monthly, weekly, daily, etc. So you want to be on the smart side of the money. So I'm going to be showing you guys that today. I'm just going to jump right into it. So order blocks are, like I said, places where banks like to buy and sell, and you want to think of order blocks as bullish and bearish engulfing candles. And if you don't know your price action very well, then you're going to need to look up what a bullish and bearish engulfing candle look like. So this is a bearish engulfing candle. As you can see, the bearish candle is completely engulfing the bullish candle that happened. Right here would be considered a bullish engulfing candle. You can see that the bullish candle is actually engulfing the entirety of the bearish candle that happened. So typically banks will create these bearish engulfing candles and bullish engulfing candles, and the technical term for those in terms of price action is that. But for institutionally, these are called order blocks, and you'll see this pattern exclusively when banks are getting ready to buy and sell majorly in the market. So they also use this actually to trick people in. For example, this buy happened right here, and you can see that there is a bearish engulfing candle right here. But what they did was they pumped price lower on purpose to search for people who still thought that the sell was a thing. And once they actually sold in, the retail traders, you can see that this bullish engulfing candle happened, and all of those guys got taken out because the actuality of the trend was bullish and not bearish. So make sure that you know, if you know your direction for whichever way the trend's going to go. Like let's just say you think it's going to be a buy, you right before price takes off, you're going to be looking for a bullish engulfing candle because this is the candle you see, and vice versa. If you're looking for sales to happen, you will see a bearish engulfing candle or several of them, which so a retail trader would be creating these lower highs and lower lows, as you can see. So that's just a little small rundown of order blocks and like what they are and how they're used and how the banks use them to trick people, but also how you can use them to tell whether trend's getting ready to take off or not. You know what I mean? It's a really good sign if you see a bearish engulfing candle and you're looking for a sell. So order blocks, by marking up order blocks, they kind of give you a zone to trade in, and I just use this horizontal ray tool. So for the first line you have is called a distal line, right? That's this top line right here. Normally I put the distal line as red. And the second thing you're going to have is it's called a proximal line, and that's the second line. You're going to have these at the base of the candles, and then the middle line is going to be what we like to call the equilibrium or 50% level. Okay, so the equilibrium is where most of these banks are going to be, where you're able to get wick entry. So I would focus heavily on the 50%. As you can see right here, before this big sale happened right here, an order block was created from this bullish structure right here, and then you had a bearish engulfing candle or a bearish order block that happened, and then it broke this order block, right? Came up, and it acted as resistance. So you had a bullish candle that came and tried to retest it, didn't quite reach it, and then from there, price dipped down. Same thing happened here essentially for a small sell. You can see the consolidation that happened here, so this is not a place where you would have wanted to get in, but same thing happened after the order block. There was a small sell that happened, and then what happened here, another bullish order block happened right here, and the actual trend took off. So if you know how to tell direction, then you can easily use these. Look at this bearish order block right here happened, and what happened after that, it sold off really hard, and then you will almost always have a retest of your order block or an attempt at a retest. This was the attempt at a retest. Several accounts couldn't push past this point. It sold off. You know what I mean? Another bullish order block came, and then that created a bearish order block, confirming that the sell is still a thing. Boom, sold off. Even had a retest right here of the order block. I mean, you can use order blocks to really help you scale up and know where banks are taking the trade. So with that being said, this is an actual pair I'm looking at getting into today, and you can see how I actually started off my charts by marking up my order blocks. So you had a sell order block right here, a sell or a sell order block right here, a buy order block fake out kind of right here, and then you have a order block way over here to your left that you also have to consider. Actually, no, these are that's from the other order block that I just marked up. So we're gonna delete this one and focus on this very bottom one that I marked up. So I look from left to right and I see what order blocks are around here next to the actual trend that haven't been, haven't been liquidity hasn't been taken from them yet. On the way down, you can see that there's clearly order blocks being created, which is what I marked up. I even marked up this one to the left because I thought that before this buy happened, this was going to make it down to this order block because this liquidity down here has not been taken out. If you have not watched my liquidity video, go back and watch my liquidity video and you'll know all about liquidity and you'll be able to tell that this is most likely going to continue to sell off at least until it hits this liquidity, and then it's going to go back up because that would make sense because it would have to come down, long rejection off this order block, and then you'll start to see banks stepping in for buys. At that point, as you can see, you already have a pretty big bullish candle happening, so I might be able to get a Fibonacci entry, but I have three possible points of entry for this buy. If I miss this one, 124 pips, 60 pips, and 85 pips up to the supply zone right here. So you can use order blocks to kind of give you a way to know where the order flow is happening. Like I said, banks like to have buy and sell at these order blocks. Even right here, there's an order block created right here actually. So I'm actually going to update this right here live in front of you guys. This is the order block that was created. So since this was a bullish order block, and we're looking for a buy, that's an extremely good sign that the banks are not coming all the way down where I thought that they were going to go, which is fine. And from this order block, it's going to actually be most likely have a break and come back and have a retest of this order block in order for it to go up. So I'm going to update this real quick in order to have the best chance of actually being accurate on this trade. So if order blocks are created on the way down, like for example earlier, this is actually a really good example. I thought that it was going to come down to that order block because the liquidity have not been taken yet. And this is why you have to be extremely patient with your trades and actually wait for price action to happen. So price action happened and it actually ended up not just completely going down. It created a bullish order block right here in this area. So I'm just adjusting these so that they're decently accurate. You want your equilibrium as much in the middle as humanly possible. Just kind of eye it. And now I know that this is actually taking off currently from this order block. So what I'm expecting is a bullish, and then it's going to come down and most likely retest this order block before coming back up. Retest happens almost every time. And when a retest doesn't happen, you know what you do? You pull out your Fibonacci tool and you actually go and get an entry mid-trend that way. So looking for a buy now. The trend is updated. I'm still right on the direction, but the banks stopped their liquidity run right here and started to do a order block right here. So they created a bullish order block right there. It's a really good sign. I'm going to open up this choppiness indicator. I'll get out of here. Did the wrong indicator. So I'm going to open up this choppiness indicator. We're going to try it again. And you can see that if you watch my choppiness live and how to pretty much tell whether liquidity runs over, this is actually just below the 61.8 level. And it looks like it's plummeting down. So if I get this going down more towards the less choppy levels, and like I said, I've done a lot of on this as well. So you can check that live out as well on that video. Then this is most likely going to continue being bullish, and I can take a trade here. If I miss this entry, I can take a trade here for 60 pips, or if I really wanted to, I can take a 85 pip trade right up here at the breaking retest of any of these order blocks on the way up. So order blocks give you a zone to trade in, and it shows you exactly what the banks are doing. So like I said, I thought that down here is going to be the order block that was going to come and retest off of, but the banks had a different idea. It actually created a bullish order block right here, so I marked this one up instead, and this gives me a zone to trade in. So when we do have order blocks, we trade order block to order block. So this is going to be like 100 pips, you know what I mean? And this one, as you notice, from here to here is going to be 60, and then from here to here, etc. So knowing what you know about order blocks, this is exactly how you kind of know the order flow of where the banks are taking their buys and sells, and you can use that knowledge to actually follow what's going to be going on in the market. Like I said, order blocks give you a zone to trade in. It filters out a lot of the noise. If you think you're looking for a buy, but it's currently selling, right? Because this just started to buy in the last couple of hours, right? Wait for price action to happen. I thought my original analysis was that it's going to come down to here. I already knew I was going to be right on the current direction, but it was about whether it's going to create an order block on the way down, or was it going to come down here and then use this order block to reject off of? So literally only one of two things that could happen in that situation. If you're going order block to order block, that eliminates actually most of the actual possibilities of things that are going to happen. A lot of people get confused and get too caught up in the noise. If you draw up your order blocks like you're supposed to when you're actually trading, then it will help you filter out the noise. If you know it's going to be a buy that day, then it gives us two options. You can either continue down all the way to the next order block level, or you can create your own order block and buy from there. That's the banks, like I said, creating the liquidity. So like this gives me a zone to trade in where for the next, I don't know, however long this is going to be bullish, right? I have this area, and then if it's still going to be bullish, I have this area, and then if I miss that entry, which I don't know why I would, um, I could have this area to trade into the supply zone where there were several order blocks created, but there were so many candles in this area. The bank spent too much time in this area for this to be a valuable order block. So that's another thing. Order blocks, you want the bullish and bearish and engulfing candles to be max 3 candles. So you have 2 candles right here. That's really good. If you can find order blocks with just only 2 candles, that's a really good sign of that's a footprint of where the banks are. But if you find one with like 3 candles, that's good. But 2 candles is great. 3 candles is good. Any more than that, you shouldn't consider it a valuable order block. Okay, you'll have a more likely chance of being extremely accurate if you focus on 2 and 3 candles inside of a single area. As you can see, every order block I marked up has been just a few candles. These two right here is a bullish one. Et cetera, et cetera. But this supply zone, it was too much activity here for me not to at least consider it. So like I just use my take profit to get up to here to this supply zone again before it does go bearish, if it ever does again, in the next several days. So you have to plan for the future when you're planning your trades. So you can see that order blocks allow me to like really plan out my trades for like the week. If I know this is going to have a high strength because of certain things that I look at, then I know that how to plan it around the order blocks, because banks will never create liquidity without coming back to take it out. So if I know this is going to be bullish on the daily for the next 2 days, but the overall trend is bearish, I know that at some point up here it's going to take up all this liquidity, take it all out on the way up, and then resume course and go back down to take out the liquidity it created actually on the way up in order to take out the liquidity right here, if that makes any sense. So with that being said, if you've gotten any value out of this video, go ahead and drop a comment, like, and subscribe. Also, I have a free Telegram chat where I'll be dropping a setup or two a week for free for you guys, and it'll be completely institutional. So go ahead and join that group for free, and you'll be able to get the setups and the analysis behind the setup. I'm not going to just send you signals. I'm going to be showing you why I got into this pair, an explanation institutionally as to why I got into this pair and why I'm calling it the signal. So go ahead and do that. Follow me on Instagram. Like I said, drop a like, subscribe. It really helps with the YouTube algorithm, and I hope you guys got value out of this video.